It's the week for Opendoor warrants, folks. We got a lot of news to get into related to Opendoor, which has been seeing some selling pressure over the past few sessions. We're going to break down if that's going to continue or if we are due for a bounce. Also, we will cover the Stonkcast watch list, some other stocks you need to be paying attention to, and also some of the major macro themes, including Nvidia, the largest company in the world, which reported earnings on Wednesday and smashed it. Also, the Fed minutes that came out on Wednesday make a December rate cut seem unlikely. We're going to cover all that and much more on this week's midweek check-in. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to share with a buddy. Don't forget to like, subscribe, and follow us wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe, whether you're a diamond-handed degenerate or a more conservative swing trader or investor. We've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, it is time yet again for the midweek check-in. Hope everyone is doing fantastic. We've had a lot of jitters in the market of late. We are off to one of the worst starts to a month since April for the S&P 500, if you can believe that. We got AI valuation concerns, which it seems like Nvidia set right on Wednesday. We'll get into that. But first of all, we're going to break down some of the latest news with Opendoor. This is, of course, the week that we get warrants. Yes, warrants come out on the 21st, this Friday, and we had the warrant date on Tuesday, and things have just kind of been wonky as far as the volume, as far as how things have been looking maybe in your brokerage account. We're going to cover all of that. So first of all, let's take a look at this piece here from TechStock. So Opendoor stock slumps as CAS warrant CFO sale and $39 million settlement test its AI turnaround. So first of all, want to take a look at this piece here. CAS warrants, of course, as I said, we got warrants this week, as this article lays out here. The most immediate catalyst around November 19th is Opendoor's special shareholder reward, informally dubbed the CAS warrants after new CEO Kaz Nejitin. According to company disclosures and a detailed breakdown on StockTwits, shareholders of record at 5 p.m. Eastern on November 18th received one warrant for every 30 shares held. The warrants are split into three series: Series K with a strike price of $9, Series A strike price of $13, and Series Z strike price of $17. All three are expected to list and trade on NASDAQ after a November 21st distribution date and remain exercisable until November 20th of 2026. The intent, as framed by Nejitin and widely echoed in coverage, is twofold: reward loyal shareholders with upside optionality, and also make life harder for short sellers by creating additional instruments that can pressure them if the stock rips higher. So this is the week, obviously on Tuesday, that was the date that, basically, if you were on your brokerage account, you saw that for a while. Opendoor was not tradable. I'm sure a lot of people had some flashbacks to GameStop back in 2021 on Robinhood, but this was a normal routine event, and a lot of brokerage accounts were set up just like Robinhood, basically preventing any kind of buying in Opendoor because of the fact that the warrants were being recorded to see who was going to get what. So that was on Tuesday at 5 p.m. And then on Friday this week is when we will actually get those warrants deposited into your brokerage account. So if you trade Opendoor, or rather I should say if you own shares of Opendoor, right, at least 30, you will receive warrants as of Friday. So, here's the thing though, the warrants have created a lot of wonky price action. If you've looked at the options chain, which we'll get into here in a moment, the options volume over the past few days has been a quarter of what it typically is on Opendoor. And really, I think this is all related to basically the warrants. We also had an internet outage to kick off the week. It's been a very weird week to start here. So I think all that kind of plays in. But I would expect as we go into, today being Thursday and also Friday, things are going to get back to normal. We should see some of that options volume return. And, it's going to be interesting to see what happens. So that's one piece of info right now on Opendoor. Also, CFO share sell. So this was another headline that came out. Basically, what happened was CFO Christina Schwartz put out a regulatory filing, and she sold somewhere in the range of 73 to 74,000 shares on November 17th at roughly $7.90 per share, generating proceeds of about a little more than $500,000. Here's the thing, though. If you just look at that headline, you might think this is bad news. Why do we have an insider, selling? I thought Kaz was turning the ship around. He just bought $1 million worth of, shares last week. But here's the thing. By all accounts, this was basically an automatic executed order to cover taxes on restricted stock units. This is more of a, just a regulatory thing that Schwartz did by all accounts. And here's the thing. She still holds roughly 520,000 or 530,000 shares after the transaction, according to this article from TechStock. So I don't really think it's that big of a deal. Again, I think it was just for tax purposes. And then this other piece here on Opendoor, $39 million class action settlement cleaning up the 2020 to 2022 era. On the legal front, Opendoor is moving closer to closing the book on a significant securities lawsuit tied to its early years as a public company. On November 18th, law firm Leviton Keller Shukaro LLP announced a proposed $39 million settlement in Opendoor Technologies Inc. securities litigation pending in the District of Arizona. Key points from court documents and the settlement notice. Basically, the settlement covers purchasers of Opendoor common stock between December 21st, 2020 and November 3rd, 2022 inclusive. The court has preliminary approved the settlement and certified a settlement class with a final fairness hearing set for January 6, 2026. Reuters previously reported that Opendoor agreed to pay $39 million to resolve claims that it misled investors about aspects of its business and risk profile. As usual in such cases, the settlement does not constitute an admission of wrongdoing. So you got the settlement piece here. Look, I personally, I don't think it's that big of a deal. We'll see if this gets settled. Believe it or not, a lot of public companies do have settlements like this, especially in biotech. I feel like you see it every other day in some of those. So I don't think this is that big of a deal. Yeah, it's $39 million that might have to come off the books if this goes through, but it's not settled yet. And also, this is no reflection on Kaz and his leadership. Again, this was during 2020 to 2022. Obviously, Kaz was not a part of the team then. And so I don't really view it as an issue moving forward, for the company. So we have seen some selling pressure in Opendoor over the past 4 days after seeing an 80% move prior to that up into that 960 range. And yeah, the selling pressure sucks. We've had some macro themes, AI fears, AI valuation fears, fears that a December rate cut may not be coming. All that's been weighing on the overall market. And given the fact that Opendoor is a high beta stock, right, it moves violently up or down when the market moves up, or down. So I don't really see anything fundamentally that has changed with Opendoor. Therefore, the selling pressure we've seen over the past 4 days, while it's been annoying after getting teased with highs of 960 not that long ago, I don't really view in the grand scheme of things as that big of a deal. I view it more as basically a buying opportunity. And this was an interesting post on Twitter from Long Ape. Are there any other publicly traded companies that has a CEO working for $1 with potential to unlock a compensation of almost $3 billion contingent on stock price hitting $33 per share? He also bought 1 million worth of shares in the $8 range. This guy is. So, I agree. At the end of the day, it boils down to whether or not you believe in Kaz and his leadership. I, for one, do. I'm on board with the movement, and I think that, Wall Street's on board with the movement. We've seen buys from Goldman Sachs. Jane Street has a massive position in the company. We didn't see them, sell off, every share that they owned after the Q3 earnings the other week and Kaz's, vision for the company moving forward. So I think we're in a good position. I think, the overall market weakness has not helped us. And if you look at some of the green that we had prior to that on that 4-day rally that was massive, up over 80%, a few of those days were basically backed by macro tailwinds, where we saw the S&P up, quite a bit. So you're just going to get that with Opendoor, and, you just have to accept it, really. Also, this post from Kaz: we've now launched our AI home assessment app, fully self-serve in a few markets. We'll extend to more markets as we learn. Our back testing shows this is more accurate, and the best part is that you can get your home assessed without having someone in your house. That's huge. The key outcome here will be significantly higher cash plus offers if we can tune this well. May take a few cycles, but I am optimistic. So we continue to see Kaz innovate for Opendoor. We continue to see AI leading the front for Opendoor Technologies, trying to be more than just a home flipper, trying to incorporate technology and AI services. And I believe they got the right man to do that with Kaz. Obviously, everything he did at Shopify, and even prior to that, right, with some of his own companies, his own startups. So I think we're in a good position. Fundamentally, nothing's changed. We're cooking up things. We got this new AI home assessment, more features to come. I'm very excited. We got the warrants coming. And so as of right now, the selling pressure sucks, but I think you got to look at it more so in a longer term lens. And with that, let's take a look at the charts. For those on YouTube, I am looking at a 9-month, 1-day chart here. So these are daily candles on a 9-month time frame, and just kind of zooming out first of all to see, what the past few months have looked like for us. We had that all-time high of 1087. We had about 2 months of downward pressure, this descending level of resistance. And then right after the earnings, you had this massive dip, which got bought up, and we had the 80% rally. And you can see here, if I zoom in a little bit, the past 5 days, folks, has been a lot of selling pressure. And that's in part, because of the fact that the overall market has been down, like I was saying, some of the AI valuation concerns and whatnot. So as of Wednesday's close, we did close below the 38% Fibonacci level yet again, which is $6.92. Not great. We are back inside of this descending level of resistance as well. So we will see come Thursday, today and on Friday, if this is going to be a temporary down move or if we have more downside. The next level to the downside I would be looking at, if we can't hold 650, would be $5.70. That is the 50% Fibonacci retracement level. Now, if we can hold 692, get back above this descending level of resistance, what I am looking for to the upside is a move back up to that 844 level, right? That has been a very, very important level, just like 965 has been an important level. It's really not rocket science. You can see the levels of demand and resistance when you're looking at the chart, especially using Fibonacci levels, which I love to use because they really simplify things. That's really it right now. 7 to 844 is this massive range that you can see here that we've really been in since end of September, right? You have this channel here, and we haven't really had a clear path up or down. So, until we get a break to either side of that, 844, $7, right? We're going to be in this channel. And so we will see. Right now, it's kind of crushing volatility for short-term contracts, but that's just where we're at. The RSI right now sitting at 42, so cooled off quite a bit yet again, reset, and not that far off from where we were on the RSI on this day here, November 7th after the earnings. We had an RSI of 42 there as well. So basically in the same range right now. So a little bit bearish on the RSI, not necessarily neutral. Neutral I would classify anywhere from 50 to 55 on the RSI. More so in a very mild bearish area on the RSI. So hopefully we can get a bounce here on Thursday, and heading into the week we can recover some of the losses we've seen over the past 5 days. But again, nothing fundamentally has changed. And if we do a quick check-in on the options chain, you can see what I mean about some of the wonky action we've seen this week with the warrants and everything like that. I mean, for anyone who's watched the show for a while, when I pull up the options chain, you typically don't see this. You got these weird like Open W, Open L, Open Z. I don't even know what Open L is because that's not one of the warrants. So It's kind of wonky right now. I think all this will settle by Friday. This is all, I believe, just natural, things getting smoothed out since the warrants dropped. So you can see we got some duplicates as far as days go. So, some of these expirations, they're kind of doubled up here on Thinkorswim. So I think everything in the system is still getting hashed out. But take a look at the volume. This is what I wanted to highlight here. You had a put-to-call ratio of 0.50. That's one of the more bearish put-to-call ratios that we've seen in a while on Opendoor. Granted, that's still 2 times as many calls than puts. But typically we've seen, options volume in the range of, anywhere from 500,000 to 1 million, sometimes 1.5 million on crazy volume days. And really over the past couple days, Tuesday and Wednesday in particular, we've only had volume in the range of 200,000, 216,000 on Wednesday. Again, I think this is tied to, some of the things that have been going on this week, such as the warrants, right? I think that's been messing with some of the options volume. Also, the internet outage that we saw earlier this week, I think is also messing with some of the data feed that we're getting there. So that's what we got right now on Opendoor. I'm excited to see what the rest of the week looks like. Make sure to drop a comment. Let me know what your thoughts are on the warrants and where you think we might be headed over the next few weeks. All right, now let's move on to the Stonkcast watch list, some other tickers you need to be paying attention to. First of all, quick check-in on Grab. Grab is one we've been talking about here for a while now. This is the company I like for the long term. And as far as a good spot to be buying, I mean, we're getting very, very close. In my opinion, this is an area where I would be looking to add calls for the long term as we get close to that 200-day moving average of $5.09. We closed Wednesday at 531. I obviously would want to see some support right around this area here, but this could be the turn as we creep back up to the upside. So this would be an area I'd be looking to add on Grab. Also, quick check-in on Lemonade, which, they crushed earnings. Again, this is a small cap. This is a company that is also, very sensitive to interest rates. I think their market cap is something like 4 or 5 billion. It's actually less than Opendoor. And so we've seen some weakness in Lemonade of late in the short term since we saw that new high of 83.77 not that long ago, dipped as low as 65, closed out on Wednesday's session up to almost 3%, closed at 70.94. But this is a company that's disrupting insurance with AI services, similar to Opendoor, disrupting residential real estate with AI services. So this is a company I'm also looking at and one that I'm very interested in. Bitfarms is getting beat up mainly due to the fact that Bitcoin has been getting, beat up. Really, the entire crypto market has been. And we've seen this thing come off quite a bit from those 660 highs that we had back in early October. Closed the session on Wednesday down 5% to $2.60. So for this one, it looks like it's trying to make a base right around 250. I'm going to see if that can hold and then get back above 3. But as of right now, I'm not looking to touch this until I can see a bit more stabilizing of the price. But for the near term to long term, I do like Bitfarms. And I do think that when it comes to any of these data center plays, again, Bitfarms is a Bitcoin miner, but they're getting into AI infrastructure. They're getting into data center, that industry. And especially after the earnings that we saw from Nvidia on Wednesday, this is a play you definitely want to have eyes on. And same with Cypher. Cypher closed Wednesday session at 1462, but in after hours was up near 16 due to the Nvidia earnings. So back above that 50-day moving average almost. This is another company I'd be looking to buy the dip on. Another one when it comes to those AI data center plays that we are clearly, based off of Nvidia's earnings, going to be needing. The demand is definitely there. And so I wouldn't be surprised to see Cypher land a deal at some point as well. All right, so those are just some of the plays. Make sure to drop a comment. Let me know if there are any other stocks that you would like to, have us check out on the show. See if we can add to the Stonkcast watch list. Now let's move on to the major indices. First of all, want to do a check-in here on the S&P 500 index. So we have had some selling pressure over the past week and a half due to some of those AI concerns, AI infrastructure, whether or not we're actually going to need it, whether the demand is going to be there. A lot of people have been concerned about AI valuations. A lot of people have been concerned about the return on some of the CapEx spending that a lot of these hyperscalers have been spending, right? And so, as of Wednesday's close, the RSI on the S&P is sitting at 41. We are off to one of the worst starts in a month since April, which is kind of crazy considering the fact that November, historically over the past 20 years, is the second most bullish month out of the year, second to July. So very, very interesting. I set up here on the daily chart, basically just Fibonacci levels for the S&P, and right now the 23% pullback level would be 64.28. I don't know if we're going to get all the way down there. We closed Wednesday session at 66.42, and after Nvidia's earnings, I think there's a case to be made that we could just maybe get back above the 50-day moving average, but we have now spent 3 days below that, which is not great. That has been historically a signal of a near-term shift from bullish to bearish if we're below or above that. We have the 20-day moving average acting as dynamic support for the S&P really since May. And so, we want to obviously get back above those numbers and see if we can really enter the Santa rally towards the end of the year and hit new all-time highs and hit 7,000 on the S&P. All right, quick check-in on the Qs, the tech-heavy NASDAQ via the Qs. Same story here. It's been below the 50-day moving average for 3 days, closed Wednesday session just a hair below 600. It was up 0.6% though. The S&P was up 0.4% almost. And with Nvidia's earnings, got a nice lift on the Qs in after hours and should be back above the 50-day moving average, which is good. Hopefully that can hold. Quick check-in on small caps via the IWM ETF, the Russell 2000. And, small caps have been getting beat up, especially with the odds of a rate cut not looking great now for December. Below the 50-day moving average quite significantly, I might add. Closed Wednesday session at 233, got an all-time high at 252, but we are above the 200-day moving average, which is basically flat right now, so not really trending up or down for that matter. Quick check-in on the VIX. So the VIX has been elevated in previous days due to some of the fears around AI, some of the selling pressure that we've seen in the overall market. Closed Wednesday session at 23.66, was down 4% on the day, and we saw spikes on the VIX above 25 the day prior, almost to 26. So it's been a while since we've seen that. So we will see if the VIX calms down to end the week off of the Nvidia earnings, which we'll get into here in a moment. But as of right now, the VIX is elevated. There are still concerns there. All right, and a quick check-in on Bitcoin via TradingView. And at time of recording, Bitcoin is down 2%. So Bitcoin has been taking it on the chin. These are some Fibonacci levels I have laid out for those on YouTube from a 2-year chart standpoint. And really what I'm looking at here, this is the 38% Fibonacci level, which is right around basically 91,500. Want to see Bitcoin be able to get back above that. At time of recording, Bitcoin is at 91,048. Got as low on Wednesday session as 88,600. So definitely want to see it reclaim this 90 to 91,000 range and see if we can get back to that key psychological level of 100,000. If we fail to hold 90 though on Bitcoin, we could see a retest of this basically 81 to 84,000 range on Bitcoin. Again, this is TradingView for anyone interested in a new trading platform. Make sure to check the link in the description and get $15 off. All right, let's move on to some macro news. So first of all, we got to talk about Nvidia, the largest publicly traded company in the world, north of 5 trillion market cap, and they smashed earnings on Wednesday. The entire market was basically holding their breath for Nvidia earnings, for better or for worse, to see, what direction things were going to go. So this, according to the Wall Street Journal, Nvidia profits soar, soothing investor jitters over AI boom. Nvidia, the world's most valuable most valuable publicly listed company, reported record sales and strong guidance Wednesday, helping soothe jitters about an artificial intelligence bubble that have reverberated in markets for the last week. Sales in the October quarter hit a record $57 billion as demand for the company's advanced AI data center chips continued to surge, up 62% from the year earlier quarter and exceeding consensus estimates from analysts polled by FactSet. The company increased its guidance for the current quarter, estimating that sales will reach $65 billion. Analysts had predicted revenue of $62.1 billion for the quarter. Shares rose 4% in after-hours trading Wednesday. We've entered the virtuous cycle of AI, said NVIDIA Chief Executive Jensen Huang. AI is going everywhere, doing everything all at once. Wednesday's result will allow investors to breathe a sigh of relief. Each NVIDIA quarterly earnings report has come to be seen as a financial Super Bowl of sorts as the AI boom has taken off, and the company is regarded as a bellwether for both the health of the tech industry and the market as a whole. So NVIDIA smashed earnings, folks. If anybody was paying attention to it, I think their quarter-over-quarter revenue growth, year-over-year revenue growth was 62%, just absolutely nuts. And if we take a look at NVIDIA on a 5-day chart, you can see clearly here the move that we had in after hours on Wednesday. Massive move up from 186 all the way up to 198 at one point, which is a massive move, right? For a company that's, market cap is $5 trillion. I mean, billions of dollars moved right there. But the year-over-year revenue growth was expected to be about 52%, and it was 62%. So NVIDIA continues to smash it, if you can believe that. And that's just great news, really, for the overall market. All right, let's move on to this piece here from MarketWatch. Fed minutes suggest there may not be majority support for a December rate cut. Federal Reserve officials held strongly differing views about whether to cut interest rates in December, with sentiment among them rising that progress on inflation had stalled, according to a summary of the central bank's October meeting released Wednesday. Many Fed officials were clear that they wanted the Fed to hold rates steady in December. These officials said further rate cuts could add to the risk of higher inflation becoming sticky and would be misinterpreted as implying a lack of commitment to the Fed's 2% inflation target. At the same time, most officials suggested that rates would likely move lower over time, but several of these officials said they did not necessarily think a December cut was appropriate. Some of these officials said they would wait for the data to decide whether to cut, according to minutes of the meeting. So if we take a look at the CME Group FedWatch website right now, the odds of a rate cut in December down to 31%, not great. And you can see it's been all over. A month ago, 93%. A week ago, 62%. 1 day ago, folks, it was a coin flip at 50%, and now the odds are at 31%. So not a lot of agreement on a December rate cut. Obviously, people like Stephen Moran that President Trump appointed are very, very dovish. He wants 50 basis point cut. But you have other Fed officials that do not see a need for it. They are concerned about inflation. And the interesting thing is that now that the government is open again, we get some of the key economic data, such as labor reports, that could swing the odds for a December cut yet again if we get some really, really bad numbers there that outweigh the concerns of, basically inflation. All right, so now let's move on to the economic calendar. So this, according to investing.com. So this is what we got now that we got the government opened again. We got some data back, so that's great to see. So today, Thursday, November 20th, average hourly earnings come out at 8:30 a.m. Eastern, along with initial jobless claims, non-farm payrolls for September. A lot of this data, folks, is like 7 weeks delayed, but it will still be interesting to see what the numbers say. Unemployment rate for September will also come out as well. And then at 10 a.m., existing home sales for October. That could be important for Opendoor if we see liquidity returning there. That'll be, very interesting to pay attention to. And then Friday, November 21st, S&P Global Manufacturing PMI and S&P Global Services PMI come out there as well. And quick check-in on earnings. As far as earnings, obviously Nvidia was the big one that came out yesterday. But today, though, you got Walmart coming out this morning. That's a pretty big deal. Good look at the consumer. Intuit after the close, Webull after the close, Gap, Ross Stores, some other consumers. And that's what we got for, this week, the week of November 17th, as far as earnings wrapping up. We had Target, Lowe's, TJ Maxx yesterday morning. Tuesday morning, we had Home Depot, right? Some other looks at the consumer from, basically the home building standpoint, right? And home renovations and seeing what some of those numbers looked like. But really the big deal this week, of course, was Nvidia, which again smashed earnings. The AI demand is still there. It's not going anywhere, at least not right now. And so, I think that's great news for the overall market. So that's what I got for this week's midweek check-in. Let's see how Opendoor wraps up the week. The selling pressure really in the overall market, like I said earlier, has kind of weighed us down over the past week. Let's see if we can find support around the $7 area, the $7 zone, and see if we can get some normalcy right back into Opendoor after these warrants settle tomorrow on Friday. I'll be very curious to see what the short interest looks like, how many short positions actually stuck around through the warrants, because now they have to be on the hook for that as well. Drop a comment. Let me know what you think about that, where we might be headed over the next week or two. Let me know what you think about Nvidia earnings. Is AI a bust? Is AI in a bubble? Doesn't really seem like it based off Nvidia's earnings. So would love to get your take on that. Appreciate all the support as always. Make sure to like, subscribe, follow us wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.